I pop one time on the scene like the money coming up on the green light. My way too heavy on the beat like money coming up, I pick up the piece nice. I pop one time on the scene like the money coming up on the green light. My way too heavy on the beat like money coming up, I pick up the piece like and we pick up the piece like they're popping the.
Yo, what's up guys? This is Mysterybluesfx and yeah, welcome back to another one guys. So this is the third episode of the fair value gap series and we're about to enter this with the sum on your way. So with this one we're going to focus on the sell model, market maker sell model. The next fourth episode will be the market maker buy model. So the fair value gap series, let's get to the sell model. 1 hour chart is 11 hours, sorry. 1 hour chart. Okay. Let me remove that real quick. So what do we have here, right? What we have here, as you can see, it's marked here, previous all-time high, right here, that we broke, right? After we broke it, we created another high, ne? Right? So, where did this week start, right? This week started here, right? So the true open of the week is right here, right? That's the true open. So as I said in the Sombonyo series, that anything above here, the true open, they are highly probable sells. Anything below is highly probable buys. What just happened? Okay, highly probable buys. As you can see, we're below true open of the week. We retested the all-time high, reacted off probably an order block in another time frame, and boom, we went up, right? And what did we do? We reacted off this here, a breaker. Yesterday we reacted off a breaker. Okay, but that's not the main focus. It's us focusing on the sell model, market maker sell model. So in this type of instance, how do we know that we're in a sell model? Right, this is how we know. So obviously, let's say this is a high, right? This is obviously a high. Change the color to blue. We are focusing on this part, this high right here, right? Liquidity has been taken above, right? After liquidity being taken above, what confirms that we're in a sell model? It must come back and take out this low, right? This low right here. That's when we'll know that we are in a sell model. This is the 1 hour sell model, right? So right there, when after the market has taken liquidity above here, boom, liquidity taken, it takes liquidity again right here, right? Let's mark that with blue. But the main focus is for us to take out this low. Also, this low here is created too, which becomes another area for us to take liquidity to confirm the sell model. So, okay, what happens is, obviously, it has to take liquidity above. Already here we are above the all-time high. So, we have taken liquidity. This right here is just us playing with liquidity and accumulating. This is us accumulating a lot to change direction, which is probably go lower, probably come back to this area right here. But wait, let's refocus. So after taking out liquidity here, what does the market do? It comes back to retest the high it took here and takes out liquidity above here. So how do we know that we're in a market maker style model? How many lows do we take right here? 1, 2, 3. But our main focus was for us to take this low. You see, even after this low was taken, we would know that we're in a sell model. But this one confirms the actual bias of everything right here. That, okay, we are in a sell model. That's why yesterday, when the market came back to this area right here, this low, this breaker right here, within the fair value gap, I sold. After selling, when it bounced off this area right here, I bought and I closed it. Right? Because it was a retracement. I took it as a retracement. But okay, let's focus. So right here, there's this big fair value gap right here. Right? This big fair value gap. We reacted off probably the 50% mark of it. Let's find the 50% mark, the consequent encroachment. Where's the Fibonacci? So, 50% mark. No, right here. You see, look at how we respected the 50% mark of this, the consequent encroachment of the fair value gap. So, it's not a coincidence that the 50% mark of this 1 hour SIBI is along with the breaker. But I'm not going to go into breakers, but you would know that, okay, you're taking a sell of the 50% mark of this, including the breaker. But what you should notice here is that, okay, we came back to the 50% of this area after taking out the lows. That's showing us that, okay, after the lows have been taken right here, we are in a market maker sell model, right? These lows, 1, 2, 3. The lows taken confirm the bias of the market maker sell model. We just reacted off a breaker here. So after that, we took a sell. So in this situation, I'm going to go back. We were here, right? We waited after this high was created. We waited for the liquidity above this high to be what? To be taken. What did the market do? It went above it, like stayed. After staying, it retested that high, went up, took out liquidity one more time, and after that broke the lows to confirm the market maker sell model. So what we would have wanted to happen before this, so phase this part out, focus on this one. So after liquidity was taken above this high right here, when liquidity was taken, if we're in a market maker sell model, what was going to happen? The market, after taking liquidity here, was going to come back, take this low. After taking this low, fair value gap, sell further. That was going to happen right here if it didn't play out like this. Even though this is a sell model, I'm saying in a different situation where after, okay, let me put a line. Don't focus on anything on the right hand side. Don't focus on this. Focus on this part here. So what would have happened was that, okay, the market was going to come back down like this. After taking out liquidity, there was going to be a fair value gap somewhere here. Then the market was going to go into the fair value gap. After going into the fair value gap, it was going to move lower. Right there. That happening is a sell model. So if it didn't play out like this, that's the different situation of the sell model. So how do you confirm the sell model? In that situation, it must take liquidity first. After taking the liquidity above here, it comes back down, takes out a low. After taking out the low, back into the fair value gap and you sell. That's a market maker sell model right there. So let's look for a different situation of a sell model. So here's another situation of a sell model. So here's a high, right? Look what happens. High. A high marked with blue. Where's the low of this area? The low will be marked with red. Look what happens. After the market, so there's a high, there's a low and a high. So what does the market do? It takes out liquidity above. After taking out liquidity above, here's another low here. It takes out this low and does what? Reacts off a fair value gap, probably a lower time frame one here. Okay, but there's an order block here, but I know there's a fair value gap, lower time frame fair value gap. It goes lower. After breaking this low, what does it do? It comes back into this fair value gap right here. This SIBI, 1 hour SIBI, and does what? Sells off it. Can you see? So I repeat again, we need to take the liquidity. After taking the liquidity above, break a low. After breaking a low, that's when we will confirm a sell model. So we need to take liquidity above a high, which is taking the high, like breaking it, then coming back lower. As we come back lower, we need to break a low. As you can see, this low was taken. What did it do? Came back down, sold. After breaking this low, what did it do? Came back inside and sold. This is eternal liquidity. This is external liquidity. But after taking the eternal liquidity, we react off this order block here, but there's a fair value gap in the lower time frames, and we sold. After taking liquidity below this low, we came back into the fair value gap here and sold. So I'll repeat. We are in this area here, 1, 2, right? So to know it's a sell model, we need to see this high taken. After this high is taken, we need the market to come lower, break a low. After it breaks a low, it will come back into a fair value gap, sell lower. As you can see, these lows are taken here. This low is taken, and this low is also taken. So after taking the liquidity below the lows, what do you wait for? You wait for the market to take, firstly, you wait for the, write this down, right, okay. You wait for the market to first take out a high. After it takes out a high, it must come back down, take out a low in the internal liquidity first, like in this situation. After it takes out the low in the internal liquidity, you wait for it to come back to a fair value gap, you sell. That would be your first entry around here. Then the second entry is you wait for it to take out the external liquidity right here. And it comes back to the fair value gap it left. Boom, we went for lower prices. And if you can just look at this, you'll see that, oh, we turned off this fair value gap right here because there's another fair value gap right here. But for us to go to that fair value gap, that specific fair value gap, what did we need to do? We needed to get into a market maker sell model. So this video is just about sell models. Let's look for another one if we can find it, but I really doubt. Okay, here's another situation. Here's a high right here, right? This is a high. And where? Here's a low. So what did the market do? So the market did what? As I've been speaking about this, it did what? It took out liquidity, what? Above, right? After taking out liquidity above, there's eternal liquidity right here. After taking out this low right here, this low right here, right? What do you see happening on the charts? Look at it properly. What do you see happening? You see the market taking this low, coming back into the fair value gap, which is here, This is the fair value gap. After coming back into this fair value gap right here, because we took what? A low. Also here, we also took a low. We also took a low. After taking the low here, 1, 2. After taking this one to be more specific, we confirm the sell model. And boom, you get your entry right here. 50% of this area right here, this fair value gap, get the 50% market, you'll see it turns off there. And boom, we sold. And after taking this too, this liquidity above here too, here's another fair value gap right here, right? And what do? We enter into this fair value gap and look at price drop. Price dropped, as you can see here. So in this situation, as you can see, price dropped heavy. So I'll explain this again. How did we know that we're in a sell model, and how did we know that liquidity was taken? So you had here an expansion from here to here. So you mark the low and the high. After marking this, like you see, price plays around. Then if you want a sell model to play out, you want the high to be taken. So the high was taken here and market ranges and ranges. So in this situation, after the high is taken, you want this low to be taken to confirm that we are in a sell model. So after this low is taken right here, we know that, okay, we'll come back into the fair value gap we left when going down to take out that low. Then boom, we sell. After taking out the external liquidity low, we come back again, boom, we sell even further. As you can see how price melted just off these two entries, entry number 1 and entry number 2. You could have held these entries from October until November, I think, or yeah, but whatever. What I'm trying to show you is that after taking out here, we wanted this liquidity to be taken below this low to know that what? To know that, okay, when we come back into this fair value gap, we have confirmed the sell model and boom, we're selling. And after taking out this low, we knew that it was going to come back into this fair value gap. Boom, we sold. So it's just that. It's simple, guys. It's simple, really simple. I've just opened you up to the sell model. Next episode is the buy model, because I didn't want to put them together in one episode, because I want you guys to go do your homework and focus on this. Like literally focus on looking for sell models on the charts. Guys, I really enjoyed this video. Yeah, guys, so what I have to say is that let's keep on chopping, guys. Let's keep on making money. And the learning doesn't stop, guys. The market moves every day, every week, and it just won't stop. It's the Sombonyo way. Thank you, guys, for all the support. And don't forget to like, share, and subscribe.
I'm going big, I am a king. Yeah, nigga, I'm in. They couldn't close all the gates cause I fit. Kicking your shins, I got no time for no quit. G63 in the mill, now there's a deal. Getting bigger and bigger, I mean, little by little.